Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of the crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. Even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get it. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route, and maybe I can buy some more. I will be grateful for that because then it's out of the way and we can move forwards again. So I actually like them because it's like, thank God, it's done. Right, next, let's go higher.
Hi there, lovers of cryptocurrency. Today, we are in for an exciting plunge into the realm of digital assets with none other than the brilliant CEO of Real Vision, Raoul Pal. In this exclusive interview, Raoul Pal shares his most recent observations and predictions regarding the state of the cryptocurrency market, presenting a convincing case for why the next cycle is set to revolutionize the industry. Experienced financial advisor and former Goldman Sachs executive, Raoul Pal discusses his steadfast optimism regarding digital assets. He discusses with us his strategic portfolio updates after making huge gains during the past bad market. In a candid interview with Raoul discusses which crypto assets he feels possess the most meaningful upside potential in the coming months. Raoul highlights that this year offers a distinct investing environment as we navigate the dynamic junction of technology and cryptocurrency. He claims that a massive inflow of cash is about to occur in the cryptocurrency market, with institutional investors and large pension funds excited about the next cycle. Pal's foresight extends beyond mere speculation. He believes that the cryptocurrency market will grow to be a powerful $10 trillion digital asset class. He contends that the depreciation of fiat currencies is what distinguishes this cycle from the ones that came before it. Raoul believes that this depreciation will serve as a catalyst, driving up adoption in the cryptocurrency space and bringing in an unprecedented flood of cash. In this fascinating discussion, Raoul Pal outlines a road plan for investors and cryptocurrency fans alike, explaining why this year promises to bring about unprecedented growth and game-changing possibilities. So fasten your seatbelts and join us as we set out on a voyage into the financial future, led by Raoul Pal. Remember to press the subscribe, like, and turn on notifications for daily updates. Let's get back to Raoul Pal and hear what he about to say.
Is there an exit strategy that you're looking to take chips off the table, because then we're going to have that downturn, we're going to see monetary tightening, interest rates go up and less liquidity in the cycle, or are you not thinking out that far? Is there an exit strategy?
Through, but I don't know the answers because I'm not sure that we get monetary tightening next time around. We need to see the structure of this cycle. If inflation comes down as far as I think, I'm not sure we'll see monetary tightening. We might see yield curve control. So we might see some tightening, then yield curve control, which is ongoing printing of money. So I don't know the structure of what the next down cycle looks like, but it's probably not as bad as the one we've just gone through. However, if it plays like I expect, because I'm not as young as you, I would take off a decent amount of lifestyle chips and run the rest. Because I didn't do that in the last cycle purposefully, because I wanted to keep accumulating through the full cycle. And that's really paid off for me. And that was a phenomenal strategy because I'm at all-time highs in P&L because I bought in the depths of the bear market, made the right switch to Solana, stuff like that, which is great. But sometimes, you want to take off lifestyle chips. For you might want to just keep compounding.
So we see Bitcoin run first, and we're seeing it play out pretty much in this cycle as well. We see Bitcoin run first, then we see it flow to Ethereum, and then Solana and all the altcoins get a run, and then NFTs. Are you going to play the cycle around anything like that as we sort of move through it? Are you going to start allocating to CryptoPunks and Bored Apes or NFTs or anything? Or is that a great way to fill up this cycle, trying to get too cute with it?
Look, some people are good NFT traders. I own a whole bunch. Punks, Apes, Beeple, Xcopy, all of the stuff you should own. I've got a bunch of that. But I'm not even sure I can sell them or if I want to sell them. Some people will trade it and will do very well from it. There will be an epic NFT cycle again, but really it's an easy way to fuck too. The best thing is assume that if they're going up, the whole space is going up. So just stick with the program. And again, if you want to do the NFTs, put them in that 10% bucket. I'm sure people can figure out a bit of extra juice there, but if it all goes wrong, it doesn't matter. Because if you do get it wrong and you put it in some random thing that looked like it was the biggest thing ever and that project doesn't work, then and it falls 50% in ETH terms, you just halved your ETH exposure. It's like, no, That's a way to get up.
In this thoughtful part, Raoul Pal shares his doubts over the nature of the upcoming recession and the possibility of monetary tightening. Despite doubting the possibility of traditional monetary tightening measures, Raoul underlines the significance of comprehending the fundamental dynamics of the economic cycle. Raoul surmises that a simple monetary tightening reaction might not occur if inflation declines. Alternatively, he raises the prospect of using yield curve management, a method of managing interest rates that involves continuous money creation. This non-traditional method begs the issue of what unparalleled actions may be done in reaction to changes in the economy. Highlighting his viewpoint based on his experience, Raoul suggests being careful while dealing with unknowns. Relying on his own approach from the prior cycle, he recommends divesting a significant portion of lifestyle assets while maintaining market exposure. Raoul emphasizes the effectiveness of his approach, which comprised building up assets over the course of the whole economic cycle and reaching record highs in terms of profit and loss. As the conversation shifts to the current crypto market cycle, Raoul talks about how Bitcoin usually leads the way, with money then flowing into other assets like altcoins and NFTs. Raoul says that there is possibility for profit for seasoned NFT traders when questioned about riding the cycle by investing in particular crypto assets like NFTs, but he advises caution. Although he owns NFTs such as Bored Ape Yacht Club and CryptoPunks, he cautions against too romanticizing the industry. Raoul advises following the general market trend, figuring that if NFTs are doing well, the market as a whole is probably seeing growth. If one chooses to pursue that route, he advises putting a modest percentage, roughly 10%, into NFTs, noting the possibility of higher returns, but also warning against the dangers connected to particular NFT projects. In the end, Raoul's strategy is based on a practical and diverse investment plan that complies with general market trends while yet allowing for some degree of flexibility and caution. That's not all. Let's hear what he will say next.
Firstly, have a plan and write it down. Write it down because you will lose your mind in the middle of the crypto bull market. And your plan might be, okay, I need to average in over the next 3 months or 2 months or 1 month, or just pull the trigger now. I'm indifferent to any one of those. It doesn't really matter. You know, even if it falls 30%, which is normal, it'll be back up. So don't even worry about price, where you get it. Then write down, I will expect, and I'll be grateful every time I have a 35% correction en route, and maybe I can buy some more. I will be grateful for that because then it's out of the way and we can move forwards again. So I actually like them because it's like, my God, it's done. Right, next, let's go higher. So expect that. Don't listen to your friends and FOMO because your friend is making more money because he's bought some toad meme that's gone up 57x and he's now flicking through brochures for cars. It's like, no, don't do that. Stick with your plan. Make sure it's about 80% of main assets. No, main assets is not some random currency that you learnt about that you think is going to be the next big thing. That's not a big asset. That's in your 10% bucket. It's like, is it Bitcoin, ETH, Solana, and maybe some of the, maybe XRP, maybe whatever. There's a group of 10 that are really big. It's not in like Bitwise's index. Don't bother doing it. It's simple. If not, it goes in your 10% bucket. No FOMO, no leverage. You will be so tempted to go, well, maybe I can just lose some 3x leverage here. 3x isn't much, right? You know, these other degens are using 100x leverage. 3x is fine. 35% pullback, you've lost your capital. People don't realize 35% is normal. Hell, we've had some 50%ers in bull markets before. So that's 2x leverage. You're out. So just don't fuck that up and stop trying to trade it. I literally don't know many successful, super wealthy investors that made it from trading. Paul Tudor Jones, sure, but he's probably made more money by owning an asset management business, this hedge fund, than he has from actually trading. Yeah, Stan Druckenmiller. If you think you're Stan Druckenmiller, go get it, but you're not. The easiest way is to be the moron who buys and holds. It's just the easiest strategy in a market that does, on average, like 140% a year in the largest asset. You don't need to do anything else. You don't need leverage. You don't need to FOMO into other stupid stuff. Just do that. And then the other thing is be careful not to lose control of your coins. That's the final thing. So you've got it right, bought the right asset allocation, you're being careful, you're filtering out the FOMO, you're having some fun in your degen portfolio, you haven't got leverage, And then suddenly you realize you've got on some stupid Thai exchange that goes down and you're like, oh, I've just lost everything. I've done that. MF Global in the old finance world, that old head of Goldman ran MF Global, the largest brokerage, retail futures brokerage. I had all of my money in it and it went bust in 2 days. It's like, boom, gone. Took 7 years to get my money back. So people in Mount Gox still haven't got their money back. So that's the other risk that you've got. So whether you're using a ledger device, whatever it is, you need to have that covered as well. Another one with wallets. Another way to pick it up is, oh, look, there's a mint of some new amazing thing. Quick, attach my wallet. My wallet appears to be empty. That's really simple to stop. You have, if you've got a ledger, you have 3 or 4 different wallets within your ledger. One is the one you expose to any shit like that. It has no assets in it. You transfer money in, you exchange with the asset out. You then have one where you are selling or buying your assets and you move that into another holding wallet. And that doesn't really hold your important assets in. And then your important stuff, you put in a third one. Just don't blend it all together in some big omnibus soup and then suddenly go, oh, I want to get that free JPEG. And before you know it, somebody's taken all of your long, hard savings at the end of 2025 when you think you're about to buy a house and you're not. You're going to buy a cardboard box and live in the streets.
Finally, Raoul Pal shares essential advice for navigating the frenzied waters of the crypto bull market. His first piece of wisdom centers on having a well-thought-out plan and committing it to paper. Raoul underscores the mental challenges that may arise amid the excitement, urging listeners to stick to their predetermined strategies. He highlights the inevitable nature of market declines and suggests that one should anticipate and even embrace a 35% fall. Raoul sees these types of downturns as chances to acquire more, paving the way for additional higher rises in the future. He issues a caution about the dangers of FOMO, fear of missing out, and advises against giving in to the urge to follow pals who could be making quick money. Raoul is a promoter of a well-balanced portfolio, with around 80% allocated to core investments like Solana, Ethereum, and Bitcoin. He recommends avoiding adding arbitrary currencies to this category and to save the 10% bucket for riskier investments. Raoul Pal argues that using leverage is dangerous, since even a 35% decline can result in financial loss, underscoring the regularity of these kinds of market swings. The experienced investor opposes overtrading, pointing out that very few really rich investors become wealthy largely by trading. He advocates for the simplicity of a buy and hold approach in a market that has yearly average gains of 140%. Raoul Pal ends by emphasizing the value of protecting one's assets, advising against relying too much on dangerous transactions, and supporting safe storage options like ledger devices. He offers a useful method for utilizing wallets and suggests dividing up assets among several wallets to increase protection. As a last word of caution, he shares his own story of losing money as a result of a brokerage failing, highlighting the risks associated with putting money on shaky platforms. Until next time, don't forget to subscribe and like for daily videos like this one.